Good day, ladies and gentlemen, ladies and germs. This is a special edition of the Equity.Guru Investor Roundtable. We're just talking about the stock markets, kids, because it's been a little wacky. Is there panic? Is there panic? I'm Rob. Down here in the basement with me eating edibles is Galen. Up in the far corner, also eating edibles, is Chris Perry, the guru himself. And micro dosing upstairs above me in the penthouse is Vishal. Which has nothing to do with what they're going to say here about the stock market, which is freaking people out. Are they freaking people out, Chris?
People tend to get freaked out by things, especially when they see Bitcoin halving in a couple of days. Look, here's the thing that I think everyone needs to remember, and I'm saying this as somebody who has been regularly converting equities to cash for the last 3 months. Yes, there's going to be a shake-up in the markets. It's inevitable. There's been too much pumpage, especially through the Trump years. We've had a pandemic that's pretty much upset everybody's lives. We're all half depressed, and yet still everything goes up. So that can't continue forever. That said, the first thing that is going to lose value well before everything else is the thing that has no value. Cryptocurrencies, its only use right now for all the bullshit that the pointy heads talk about replacing the dollar, the only use for crypto right now is a stored perception of value. And I say perception of value because there's nothing behind it other than what someone else might pay for it. You sell a stock, you're selling part of a company that actually does business, it makes revenues, it makes profits. If you hold on to your ankles while that thing drops, it may still come back if it's an irrational sell-off. But crypto, all you have is that someone else out there somewhere is more determined to buy that thing than you are. And that's the only way it goes up in value. And if that stops, if people say, hey, hands off the wheel for a little bit, that thing craters with nothing behind it. So all the Bored Apes, all the NFTs, all the people paying $10,000 for an 8-bit picture of a cat, that only contains value if someone else agrees that it does. Equities is not like that. Equities, it contains value because there is some value. So even in a big sell-off, if you hold on, things can come back. And that's why people have invested in the S&P 500 for the past 20 years have never lost money. So right now, Bitcoin craters in an afternoon. Everyone freaks out that it's the end of time. People who are over-leveraged on crypto sell their equities to pay for what they owe on the crypto. That means the equities go down. Everyone says the sky's falling. The sky's not falling. You know when you know the sky's falling? When real estate prices start dropping. If real estate prices start dropping, prepare a go bag, make sure it's near the front door, turn everything into cash and ramen noodles, and get the fuck out of the city. Because then it's going to be hell to pay. But right now, man, this is like just what people have learned about cannabis companies over the last couple of years. There's no value if nobody really has anything to hold that is worthwhile.
Is this World War III, Galen? What are you thinking?
Well, as Chris had said, the first things that are going to lose value are, cryptocurrency, because there is no basis for that value other than a few whales who seem to be holding tightly onto the stock and promoting it, or these tokens. I will, however, carry that conversation a bit further to say that the stock market itself is also full of a lot of non-value in the stocks, in the equities themselves. The indices may be doing, okay and well, but the meme stocks, and I'm pulling out fucking Tesla here, is way overvalued.
Oh my God. If you're over leveraged on Tesla, you're in for a fucking hurt.
Absolutely. Right now, they've dropped beneath their 1 trillion mark, thank fucking God, but I have a feeling they've got a lot longer to go. Now, this is me calling it. I've always been calling it, so you can call me some sort of Chicken Little. I don't care. I think Musk is a piss-poor businessman and a fucking patent troll. So, yeah, so basically, this company's heading for dirt. It has no value that it actually pretends that it has. It's a conglomeration of a bunch of failed business attempts and ass covering on behalf of Musk and his brother Kimball. Now, there's other ones besides that. For instance, a lot of tech stocks. We got kicked in the ass by Silicon Valley and private equity, who boosted the value of stocks that have no fucking value at all. It's all vaporware or promises on a future performance. And we've got suckered into that. And we've been playing that game, and it's branched out into other industries. But that paradigm has to end. We've ended up with a complete everything balloon and everything bubble. Now, a lot of that has to do with the overnight payments made by the Fed to keep the banks trading with each other after they got really pissed at each other for selling each other bad motorcycle loans and car loans. So, the unfortunate part is that giving the money to the banks, none of that trickle-down economics does not work. None of that was given to us. Right? So the immediate effect of all that money printing was not realized. It was just seen in the marketplace because that's where the money went. Now that they've got a little bit of kicker from federal payments for people that were experiencing the pandemic, we're starting to see a little bit of a rush on the inflation side for consumer products. Now, we're going to see a lot more of that in the next little while. I have a feeling this is the tip of the iceberg. Yeah. Basically because the supply chain problems are not momentary. It's the same reasoning, but has a little more basis than when the gas price goes up, it all of a sudden goes up at the pumps. But when it comes back down, it takes a while or never comes back down. Yeah. Because there are residual and knock-on effects for fucking up the supply chain. Yeah. So basically, we will be months and months away from getting back to any kind of normal supply chains in any industry that we have right now. Now, with the pandemic circumscribing transportation in terms of making sure that everybody's vaccinated, and you've got truckers that are going like, I'm not getting fucking vaccinated. And so basically what we're going to do is we're going to reach an impasse. Then we also have the incoming of a fascist government coming in 2024 in the United States. It's going to change politically the entire situation in North America, not to mention the brewing war that we have going on in Russia as it sort of embraces its regional colonialism. There is a tremendous amount of instability coming into our presence over the next little while. Yes, Vishal, it is headline based. I know, and sometimes that doesn't necessarily impact the markets as much, but I have a feeling this kind of a grand transition is really going to set it on its ear. I think the best thing for anyone to get involved in right now, it doesn't necessarily mean sell everything, as Chris said, and put everything in a go bag and fuck off. It means that you really have to find the value. Start looking at infrastructure. Start looking at actual stocks that are going to be going for like food, for water, all that kind of stuff. The things that are actually going to happen. Not just, let's say, a perceived problem like cryptocurrency going, yeah, we're going to need to replace the fiat currency. You don't need to replace it. The problem with fiat currency is an economic problem. It's not a currency problem, right? Yeah. Find something that actually has a problem to settle. Find something that actually has value, and find something that's not going up 5,000% in less than a month, because that in and of itself is a clear clue that it has not the value.
When it takes so much electricity to maintain the ownership record of GIFs on the internet, that we have electricity costs go up, that system is broken. NFTs are not the future. Crypto is not the future. Blockchain's an interesting tech, but right now, it's shooting an arrow at the wall and painting a target around it. There's no real use for the blockchain tech that couldn't be done in other ways, a lot more efficiently than we're doing it right now. Excuse me. You know what will make the economy go nuts? If we all get over COVID. Yep. If we all get over COVID and start going out and doing shit, I guarantee you the economy goes through the roof for another 6 months. So realistically, we're all depressed. We're all stuck at home. We're all letting our office leases expire. We're all cashing out things that we've made irrational profits on so that we can pay the irrational taxes that we have. And that's just the situation we're in. If Tesla goes to shit, a whole lot of mutual funds go to shit. A whole lot of institutions go to shit. So probably the US government won't allow that to happen in the short term. In the long term, it has to happen because it's not worth more than all the other car companies of the world combined. But realistically, right now, if you're thinking about, are we going to lose all that money between now and Wednesday? No. Are we going to lose it all between now and next week? No. There are going to be places where things are overvalued that shouldn't be, and that might change. Yep. But while we're still getting 20% price increases on condos in Saskatchewan, we're sure as hell not having any sort of an economic collapse.
Hate to say it, you might want to channel your inner Dick Cheney and buy some Halliburton and anything else to do with the military-industrial complex.
Or just sit in cash for a bit. Like, honestly, The more cash you got in your account, the less you give a shit whether the world implodes.
Yeah, yep.
All right,
There's a
Michelle.
saying in the military that there's more money made in a single day of war than an entire year of peace. So a lot of people, the money stocks, that war is a lot of money, right? I mean,
Yep.
I think everyone knows that. A lot of great points here brought up. We've talked about some tech stocks here, Galen Peloton. That's one of those stocks that got cratered here. Even things like Zoom Media, Teladoc, a lot of these sort of pandemic stocks have been taking quite a hit. Of course, there's also ARC that Kathy Wood, what she did to hedge was she got out of large cap tech stocks and bought illiquid small cap tech stocks, which might not be a good, there's a lot of people talking about if she gets squeezed out there, it's not going to be pretty.
Did you see that ARC changed its website front page today? It used to show a year-to-date increase.
Right.
Now it shows a 5-year increase.
Oh man, there we go.
The year-to-date is not good.
No, that's what a lot of people are talking about. Netflix had just let me show you guys that chart because that was unbelievable. That kind of drop. You guys can see it just took out all my support levels that I was watching very quickly in one day. Gap down like 20%. So
Damn.
there's some fear here, right? We are sensing fear. The question is it a geopolitical thing with the U.S. and Russia, or is it more to do with the Fed ending the easy money policy, which a lot of people claim is the reason for markets to jump like this? Because if there's nowhere to go for yield, you might as well put your money in the stock market. Galen, you brought up inflation, and the thing is, generally stock markets do well in an inflationary environment because stocks is usually the best way to beat the rate of inflation. So, if you look at the thing is,
my qualifying thing for that is if everything goes up, you're not going to have the money to put into the fucking stock market. The fat cats will get rich, but you and I are buying $20 loaf of breads, right?
Yeah. So if you look at, Weimar, Germany, Venezuela, Zimbabwe, these places that had crazy hyperinflation, stock markets always kept going higher. There's tons of millionaires made, but that money's not really worth much when the bread is worth, as you said, $100,000 or something at that time.
Yeah.
So, in a hyperinflationary environment, it's more about, I think, preserving your purchasing power. And that's where I personally believe things like commodities. And again, here's me celebrating gold and silver. But I think, watch these commodity charts because I think that's the inflation trade if we are looking at inflation. But if we're looking at the markets, I think there definitely is some fear here, with the VIX. Tons of charts here. The ones that I'm looking at are, I look at the 10-year yield, which is the interest rate market, which did break out. And it is pricing in maybe multiple rate hikes this year. While we're recording this on a Monday, but there's some Canadian analysts saying that the Bank of Canada is going to raise rates 50 basis points on Wednesday. So they're going to surprise everyone and raise 50 points, whereas the Americans might raise 25 basis points. Personally, I think that's going to be a bit of a surprise. If that happens, I think that has potential to damage the markets even more because no one right now is pricing in a rate hike on January 26th here. If I can show you the Fed probability. Yeah, so there's only a 5% chance of a rate hike. So if the Americans or the Fed, raises rates, I think that's going to take a lot of people by surprise. A lot of people are looking at March 16th, 2022 for the rate hike. And I think it should be like that in Canada as well. But
I'm just printing some money, don't mind me.
But I think, this is what we should be watching. And also, the cryptos tend to be risk-on assets. So when everything's rosy, when people are they don't care about anything going on in the world, everything looks peachy and nice, you don't mind taking these riskier trades, right? Technically, stocks, equities are risk-on assets. So are crypto. So we've sort of seen this correlation between Bitcoin and the stock markets. And risk off is when you run into safety. So people look into run into bonds, and they generally do tend to run into the US dollar as the safe haven reserve currency. So those are the two charts I'm watching here for fear, for gauging fear. It is going to be the bond market chart and it's going to be here the U.S. dollar index, which personally I believe is actually in a new uptrend, a new bull trend, and you can actually read about that in today's market moment. Is the U.S. dollar about to take off? Where I actually talk about the U.S.-China issue with interest rates, because believe it or not, China actually said, hey, don't raise rates because we actually have an issue here. We actually cut interest rates by 10 basis points. So if you guys raise rates, we have to change our stance. So there's something going on with interest rates there, and I do obviously cover what goes on with U.S. Russia. And I think if I'm a bit more worried about that U.S. Russia side, I would be looking at the price of oil to gauge that, because I would think if people are pricing in a major conflict, oil is going to be taking off. And there's been quite a substantial move since December. So either people have been pricing that in. Just keep an eye on oil, oil, the US dollar, and that bond market chart. I think those are probably the three most important charts here to gauge on whether markets are going to be going higher or if they're going to be breaking down. Personally, this is just me. I still think we're holding up here. I don't know if this is, I'm not saying now's the time to buy. This crazy daily candle we had today where markets were red, they looked like they were going to crash. All of a sudden, they turned around and we closed green on all these indexes, the S&P, the NASDAQ, and the Dow Jones. So amazing buy the dip opportunity here, but this could very well just be, a dead cat bounce, because maybe this is just people closing positions as we head into a high risk event. So I'm not saying buy now. I would look for a technical break above, like, say, 4,500 here on the S&P. But one thing I'll point out, which might get people a bit bullish on the markets, is that the Federal Reserve balance sheet, even though they've been talking about tapering and selling off their assets, it's still making record highs at $8 trillion. So the Fed is still buying stuff, mostly bonds, right? That's what they say. But hey, if they don't want to let Tesla, as Chris said, right, they don't want to let Tesla fall.
I guarantee you that candle up at the end of the trading day,
yep.
We remember those from the Trump administration too, right?
Crazy days.
Massive down days, and then suddenly in the last 15 minutes, everything comes back.
Yep.
That's the power of the guys that print money going out and just allocating that money on the markets. Yeah. So, if there is a big crash, who loses the most? The US federal government loses more than any individual, because they bought everything at the high and they've continued to buy it to make that high continue. And so if we suddenly decide to all take our money out of the system one day, which is essentially what a crash is, then the US government either has to take that loss, that $8 trillion potential loss, on the chin. Do you think they're going to do that, or are they just going to make it $9 trillion? Like, it will end badly. It's just not going to end badly in January.
I would say the best case scenario for us would be basically Japan. Japan has like a 200% GDP to debt ratio, so their balance sheet is much higher. The Bank of Japan is buying, they own 90% of the ETFs in Japan. For 30 years, the stock market did nothing until I guess recently we're finally, hitting highs that we haven't seen since 1990, 1991, 1989. And basically that whole era, the lost generation or stagflation, Japan's not being able to raise interest rates, right? They're a negative interest rate. So a lot of people talk about that happening, say, in Canada and the US, where maybe there's too much debt out there, where we won't even be able to raise interest rates, because it could, as Chris mentioned, that could even impact real estate, and government really doesn't want real estate to come down, or the central banks, I would say. So I would say, Japan would be the best case scenario, but the thing is, we just don't have, I don't think we have that manufacturing or that real economy that Japan had back then. And they had a lot of savings, right? The Japanese and Asian countries save a lot of money, although because of the pandemic, we have been saving a lot more money recently too. So, Japan's the best case scenario if you look at the monetary policy and the stagflation. It might not be a pretty landing here with all the overpriced assets. But then again, Japan had the same things as well, right? So,
all right, well, I'll tell you what, we're going to come back in a few days here after the Fed day and probably reevaluate what's gone on. But this has been a special bonus roundtable. No real disclaimer required, because we're not telling you about company or whether to buy anything. We're just giving you a report on what the hell is happening and what we think might happen next.
Have your go bag ready.
So let's just say this to end it off, Rob.
What's
To
that?
end it off, let's go around and say, are you buying the dip or are you selling? Just for now, let's
Buying
just
the
say.
dip or panicking, Galen?
I'm not panicking, but I'm certain as fuck not buying a dip because there is no dip right now. It's on its way down. We got at
Anybody
least another
buying
6
anything?
months before anything normalizes.
Yeah, but plus you're making me have to do a disclaimer, Rochelle. Why are you buying stuff? Are there a lot of people excited about silver?
I'll be
That's where you
buying
gotta put your money,
ingots and
man.
putting
That's
them
where
in my bedroom. There we go. That's about as far as that goes.
Chris is going to buy some of that. What's that? Element Nutrition. Yeah, we'll get a little of that sauce going.
I ain't buying shit. I've been selling for several months and just establishing a cash position because I am convinced that we will have some hardship, especially if the anti-vaxxers keep this fucking virus going on.
Yeah.
But I also want to be cashed up and ready when we get through COVID, so as that I can go bonkers and buy all sorts of things that are going to be great. This is the reason we started a professional wrestling promotion, because when we're allowed back out in public, people will be looking for things to do.
Yep.
So I just think that now is a good time to be sitting able and ready to throw your cash down on things that are going to be at their lows, that are going to have initial interest, that aren't going to be risky, and that there's going to be great value in. But today is not the day to try and judge. Look, famously a couple of years back, actually 3 or 4 years back, I predicted the high point of the cannabis market in Canada within 2 days. It's been all downhill ever since. A couple of ups, but mostly downs. I'm never going to be that good again at guessing the beginning or the end of a crisis. So for me, I'm just like, I know it's coming. I'm just taking it easy. There are still opportunities to buy things and trade things. But for the most part, if I see something's having a good run, that's my time to get out and be sitting on a nice big wedge so that when hell comes a-calling, I don't have to go and borrow money to get wealthy.
And I think we should mention that because Chris raises a great point. Cash is a position because there's a lot of traders and investors out there who always think they have to be in the markets, right? You can sit in your hands, and cash is always, sometimes the best position, and you just wait it out. So we should let people know.
And it's good sometimes to be the bully at the table too, right? With a microcap company, if you can throw 25K down into a very illiquid stock, that stock moves really hard. So, if you don't want to just be the guy following the tides of the general market, if you want to actually make the tides, having a substantial cash position and being able to jump on something can actually turn the stock around.
Yep. By the way, I wasn't talking about Element Nutrition, the stock. I was just talking about the drink itself.
Oh, the drink? No, man.
Run by the local.
I'm counting out the Monster right now.
It's my Monster shares, though. Monster is a publicly traded company.
So, funny story. I wrote the marketing copy for, I think, the first Monster energy drink way back in the day as a freelancer. And they offered to pay me in stock. And I said, no, thank you. My landlord won't take your stock as rent. And if I had, we wouldn't be even talking right now.
Boy. Ifs and buts were candies and nuts would be Christmas every day. All right, ladies and germs, we'll see you on the next Equity Guru Investor Roundtable for Chris and Michelle and Galen down in the basement. Galen, fire up that whiskey. We'll see you next time.
Take care.
Investor Roundtable.
Don't make a noise down there.